Mudiwa, how you doing today? Can you hear me?
I'm well. How are you?
Doing well, doing well. Good to see you. Good to see you. I saw your message. I was excited when I saw you was coming. So that's what's up. We're waiting on a couple of more people to come.
Look, I could tell you, I thought yesterday was Friday.
Oh
So
wow.
I logged in and I'm thinking, did I miss it? I sent you a message.
I
Did I
saw you.
miss it?
Yeah, no, we live. We here. We here.
Oh, this is
Yeah, so
excellent.
we're gonna give a couple more minutes to see who we are gonna go, but you know how we go. We gonna run it. Wherever there's more than one, two or more in one
Right.
space,
I'm
we gonna
good.
do what we
Whatever you
need to do.
decide, I'm here.
Already. So thank you for coming and spending your Friday afternoon with us or early evening. All that good stuff.
Well, thank you for allowing
hmm
me to be a part.
No problem, no problem. So we're gonna actually I'll start the actual presentation at right at 5:35. So we got a couple minutes. Let a
Okay,
couple of other people to jump in.
cool beans.
hmm So we're gonna go ahead and get it going. Get it going. Um, I want to thank everybody who's here, our presenters, our attendees, all of that good stuff, and even the folks who listen to us as presenters before we have to come present and tolerate us. We're like, hey, I need to finish this. So we all have our different support systems. So I want to give a big thanks to everybody that as we get going. Um, and before I started, my name is Cavanaugh Nweze. I am the founding partner of Nweze Financial Solutions. And our big thing is to serve and to give information, and especially financial information, to people within our communities. A lot of times when we talk about financial information, financial services, they're either unavailable or they're exploitative when they're in our communities, and we just don't have the proper information. So what we will be talking about today is some things that we don't talk about often in our communities. So I'm really excited, and we're changing up a little bit. Usually, we will have it'll be myself and another presenter, but today we got two presenters, and so I'm excited about that. And then another thing is I usually go last, um, and kind of talk about it, but we're changing it because I'm gonna go first today, to kind of talk about some things, and then I'm gonna sit back and I'll be in my student mode. I got my pen and my pad because even as an entrepreneur, this is something that I've been preparing for. And I want to make sure that I do the right things. And the folks that I have here with me today, Miss Ronnie, brother White, these are folks that I lean on for even my personal things. Ronnie been on me like Kavanaugh. Let's get this finished. We need to do it. And so I'm really appreciative to them. And it was apparent that we need to have this conversation. Okay. So before we get started, I want to give you both a couple minutes to introduce yourselves, kind of talk a little bit about your background, and then we can take it from there. Who wants to go first?
Kick
Well,
it off. Yeah, ladies first.
all right.
Hello to the Nweze Financial Tribe. It's an honor and a privilege to be here with you. My name is Ronnie Benjamin Tally now. I'm a newlywed, so I have to add a tally on it. But I've been in the financial services industry in all facets really for the past 22 years, ranging from fraud protection and business credit cards to retail banking to accounting and tax software, all the way up to building your financial house. So there's nothing in the financial industry that I have not touched. And so it's a privilege to be here with you all today. I have the utmost respect for Cavanaugh and his team. And so when Cavanaugh asks you to do something, if you're anything like me, you just don't say no, right? And so it's a privilege to be here with you all today. Thanks for having me.
I feel so special.
Awesome, awesome. Well, I mean, I don't know how I follow that up. So I'll just say who I am and I'll just give it back to you, Cavanaugh. But my name is William White. I am the president and chief financial advisor of Forge and Link Financial Group here in Dallas, Texas. We serve all over the United States. And so we're an insurance, financial services, and wealth management firm. We do everything from retirement planning to your insurance, all the way up to opening franchises, helping people manage risk in their portfolio, and being able to see how they can take risks to take advantage of some opportunities that they might not have had without the education and some of the things that we do for our clients. So very excited to be with the tribe today. Looking forward to serving. So that's me.
Give thanks. All right. So when we to dive into it, I felt it was important to me myself as a financial practitioner, as having a particular skill set. We don't, it's I understand my skill and I understand what's not my skill, which is the practice of tracking this income and the expenses for businesses. And so I have to lean on others myself. And then when I look back into my own personal background, in my personal background, retirement is not something that we talk about. We see it, and we see elders, and usually it's people that are my age, round about my age, who end up having to support our elders for whatever reason, because of lack of preparedness or just lack of education. And so we end up talking about week to week, month to month, but we're not talking about 30 years from now. We're not talking about, hey, in 30, 40 years, I have this set aside for me. We're not having that type of planning, which ends up causing issues in our communities, which is prevalent. We all talk about generational wealth, but generational wealth doesn't exist if we can't secure the current generation that we are living in right here in today. So we end up passing on burdens, or in inheriting burdens or issues from those who go before us. So we got that's where I come from. So that's why this is very important to me, because I don't want to see this continue. Number two, before we started our firm, I worked personally in the corporate environment. I worked in big oil, right? And then they told me we took a whole day. They talk about medical benefits. We talk about 401ks, and my eyes was blurred. I knew nothing. I went from making no money to making almost $50,000-$60,000 a year. And it's like, whoa, what do I do with this? And then somebody was telling me 10, 15 years ago, hey, save this money, don't pay taxes on it, and I'm gonna match a portion of it. I completely misused my 401k because of lack of education. And even though I saved a lot of money, I lost a lot of money. I probably lost a good 20, 30% of what I funded that account, because I didn't know it, and I was using that account like a savings account. And that's not what it is. So that's, even as a financial professional and that not being my area of expertise, that's the issue. And it was like, I need to figure this out, which I have people like Roni and William to help me with that. Right now, transition to me as a business owner. As a business owner, the one key thing, really a few key things, but the biggest key is that ain't no employee matching. You know what I mean? That's number one. So you have no help funding these accounts, right? So we have to make specific and intentional decisions to put money aside to when we are not actively working in our business, because a lot of us as business owners, we might not be passive owners. We are, even myself, I am a very active owner in my business. So I have to prepare for myself and for my family's future for when I am not. So it's an extra challenge as an entrepreneur, right? So, and then to be able to do anything that we talk about today, as an entrepreneur, it is paramount that we know our numbers. We got to understand our bookkeeping. We have to understand our financial statements and be in compliance for taxes, because it's by doing these things will we understand and know what it is that we need to do and to prepare for retirement, what it is that we have available to us to be able to move forward in account in retirement. And yeah, if you don't have that, we're lost. We even further behind. So we got to be educated on the retirement products. We need to be educated on the finances of our businesses. And so that's what we're going to kind of talk about today. So as we are educated on the finances of our businesses, most businesses fall in two very broad categories. And like I said, I was telling them before I started, I had to minimize this as best as possible. So bear with me because of our limited time, right? So when we talk about those, when we look at those numbers, the big thing is our business is either going to be cash rich or it's going to be cash poor, period. And it can be a variety of reasons. Neither is good, neither is bad. The business is operating, money is coming in, money is going out. But you got to just remember, we're either cash rich or we're going to be cash poor. So let me pull this up because I got a few things that I'm gonna walk you all through, and then I'm gonna pass it on to our guest today. Okay, so let's share this one. Okay. All right. So when I talk about being cash rich or cash poor, like I said, these are general categories, and you end up in these categories for different reasons and for very good reasons, but it's okay. It's not a bad thing, you know. So when businesses are cash poor, the characteristics we generally have, we'll probably have a no or a very minimal tax bill. And we also have very minimal money in the cash business accounts because money is coming and going. We're receiving it and then it's going back out. And we have business debt. The business owner is servicing a particular amount of debt, right? And then we have sometimes as business owners, we also have we have to draw on our business for other personal reasons, to where we have to draw down on our business, which might actually have to which will reduce our cash on hand. Now, when we talk about cash rich businesses, we got a surplus. We got our business accounts are looking flush, and there is no or very little debt. Then we also have high profit margins. When I talk about high profit margins, let's imagine that you sell something that it costs you 10 cents, but you can sell it for $10, right? That's a 10x each time you sell a product, which is a high margin, which also creates high profit, which in turn you get a high tax bill. Okay, so these are the general categories, and they happen for different reasons, but that's what we were talking about: cash poor or cash rich, right? So if you are a cash poor business, it's something that we call, it's a book really, it's called Profit First. It's by Mike Makanovitz. It's almost like a Russian last name, and my name is Cavanaugh Nweze, so I have no excuse for mispronouncing anybody's name. So please, Mike, forgive me. But Profit First, and what Profit First means is taking cream off the top. Imagine any dollar that you receive for your business. Let's say you take 1% to 2% cream off the top, period, and you put that aside for yourself. And then for cash rich businesses, we have to take a method of tax avoidance, which means I have cash to spare, and I have a high tax bill. So when I fund these accounts, I really want to lower my tax bill to be able to still have more money available. Okay. So here's a quick example. So let's talk about a business owner the business that is cash poor. So a very simple example: we have this business taking revenue of about $100,000 a year. We got operating expenses of about $89,000, and we have profit that we on paper of $11,000. What that means is, so we have profit of about $11,000, right? In the pursuit of this profit, this business owner, remember the previous slide that I talked about, they have a lot of debt. So throughout the year, they made $15,000 in debt purchases, which takes cash out of the business. But a lot of business owners don't realize, when we're servicing debt, when we're paying down a liability, that money, you have to have profit to pay that down. So a lot of business owners end up like, oh yeah, I got $11,000 profit at the end of the year. Yes. But then when they look at the bank account, the money's not there. So you're cash poor. You had a successful year. You paid down some debt. wonderful. But how can we take a little bit off the top to prepare for ourselves? So in the profit first method, let's say you take that $100,000, and for 2%, you take that 2% out every week, every couple of weeks. You taking that out, you're funding that account, and you're funneling it to something that you need for yourself. It doesn't necessarily become a tax deduction, but you are finding money before you pay any other bills for your business, and you force your business to operate on what's left over, right? So that's a very general explanation of profit first and how to use it and how to get money to your retirement accounts if you think that you don't have as much cash on hand as you like, right? So, when we talk about a cash rich example, I got a little typo in there. So when we talk about our cash rich example, we have a high margin. We talk about the same amount of revenue of $100,000. We have $57,000 in expenses, right? But we have $43,000 in profit. If we use that 20% tax rate, we're going to be taxed of $8,600 at the end of the year, right? So, but if we take this and we look at it, and if a business owner is proactive, it's like, hey, yes, I want to extract money from my business. I want to use it for my family and to prepare for my future. Then how can we minimize this profit, fund our retirement accounts, and lower our tax bill? So there are different vehicles to where, let's say you fund a retirement account, you got $40,000 in cash. You're like, look, I want to send this over there, right? You fund that account for about 40 grand. You still retain the money personally for yourself and for your family, but at the same time, you have saved yourself about $8,000 in taxes, but you still hold your own cash. And these things can happen. There are people who are in these situations, right? So that's when I talk about cash poor and cash rich, which is very, very important. So when we think about those things, that's why it's important to know the different options, so we can be able to make a decision by knowing our business finances about which method we can choose to fund this particular account. Okay, so oh, and one other thing that we always overlook, and was definitely not spoken about in our communities, or to me, is we don't that I was aware of, is the ability to use. We look at retirement funding as a burden, or it's like something else that I have to do. I need this money now. But when we really think about it right, we can really think about this can become an asset that can help us leverage other methods, other things that we need to do for our family. And we have it sitting here, it's serving the purpose of having us prepared, we're taken care of, but we can use that to leverage other things that we need in our house, in our homes, or even in our businesses as we continue to move forward, right? Okay, so I know that was a lot of information. I tried to make it as simple as possible for the time that we have. Um, and yeah, there we go. Kool-Aid put the profit first in there. You have the link, so pretty much take a look at the book. I highly recommend it, and there's so many other levels within that book, but I just wanted to touch on it because there's something that's important to me, and it's something that's important, and it can make a big difference for anybody who was in that cash strap type of business. It's about cash management. All right. So now we've talked about a little bit how we can fund our accounts in different business categories, right? Now I want to pass it on to the professionals that we have, and if I'm learning from my first mistake, I need to be going ladies first. So we're gonna pass it on to Roni, so we can get this, we can get a different lens and different type of information, so we can keep going.
There we go. There we go. Thanks and it's a perfect segue to Cavanaugh, passing the baton into, and now how do we begin to build the risk management for the right now and for the future, right? And so I'm glad you segmented it that way. That was a natural transition And so for those of you who are just joining, again, I am Roni Benjamin Talley. I am a licensed financial professional located here in the Dallas-Fort Worth, Texas area. And I've been in all facets of the financial services industry for about 22 years. But when I finally decided to step into entrepreneurship, I was excited about the vision God gave me, about the plan we put together to accomplish the goal. However, I knew that the benefits typically associated with a corporation, like healthcare, life insurance, disability, retirement that you mentioned earlier, Cavanaugh, that was all my responsibility now to maintain. And so I realized I needed to safeguard the future of my family, my finances, and ultimately my business. And today I'm honored to be able to serve small business owners and entrepreneurs in this space of financial guidance, to position them for success in the future as they focus on the operation and the success of their businesses. And so first things first, let's dive on into the disclaimers. Let's get that all out the way. Next slide, please. We've got to get this legal stuff out the way. So this seminar is for informational and educational purposes only. Any tax-related discussion reflects an understanding of general applicable rules and was prepared to assist in the promotion or marketing of the transactions or matters addressed. It is not intended and cannot be used by any taxpayer for the purpose of avoiding any IRS penalties that may be imposed upon the taxpayer. New York Life Securities, LLC, and Eagle Strategies, LLC, Fortune Link Financial Group, LLC, its agents and employees may not provide legal, tax, or accounting advice. Individuals should consult their own professional advisors before implementing any planning strategies, all right? Had to get that on out the way. Well, one, I want to take a moment to commend you all for having the boldness and courage to go against the grain and start your own empire, your own economy, if you will. And here are some stats that I think you will be very proud of. First stat, 68% of the world's wealthiest individuals with a net worth of $30 million are all self-made. Yes, 72% of African-American US businesses are profitable. And 78% of US small businesses are currently profitable. So I want you to take a moment and pat yourselves on the back for growing profitable businesses. But how many of you know it's important to make money, right? We're in this business to make money, but it's even more important to know how much you're able to keep. Am I preaching to the choir? Well, we surveyed business owners to uncover some of the pain points of building their businesses. And here are some of the most common problems that business owners are facing. Okay, number one, there's no step-by-step guide to go from infancy to profitability. You sort of start with this idea, and then you're simply ignorance on fire in many cases, right? Number two, retirement ideas for employees look very different in more ways than one for entrepreneurs. And we're talking about the types of plans, yes, but even the entire picture of what retirement looks like is very different. Number three, unpredictable income, and even determining how much to pay yourself versus how much to put back into the business, right? And then number four, knowing who to trust with the vision. How many of you have been told your ideas are crazy? Could you imagine how people looked at Henry Ford when he babbled on about building a motor car? Or Jeff Bezos when he talked about building the world's largest online bookstore through Amazon from his garage, right? It won't always make sense to the observers, right? But number five, you're so laser focused on the right now needs that entrepreneurs don't always think about how they need to protect the needs of their business and their home life. And then number six, the difficulty in separating business expenses from personal expenses. In many cases, it feels all the same, right? I know. But how do we solve? What are the recommendations to avoid many of the pitfalls that entrepreneurs face? And Cavanaugh talked much about this process. We need to be planning for the future. And so it starts with the foundation. Next slide, please. And I want you to think about this in terms of laying the groundwork, like a financial house, if you will, right? And you always build the foundation first. So even with the physical house, that means what? Digging in the mud, the blocks, the steel, the concrete, all the stuff that's not very exciting, but it is the most critical part of building a house to making it stable and making it secure. Same is true with the financial house. And that includes number one, we wrote it 3 times, budgeting, budgeting, budgeting. And I know it's sometimes the hardest thing to do, but it is one of the most critical parts of the foundation of building your financial house, right? Because that budgeting piece, that creating the systems and the processes that are made duplicatable in the business, implementing the strategies that allow you to scale your business, that will reveal to you how much money you have to put aside for risk management, to put aside for retirement strategies for 30, 40, 50 years ahead. So ultimately, the goal is to protect your hard work. Next slide, please. This is probably one of the most critical pieces of the foundation of building your financial house. And let's talk about what that means through risk management, okay? Now, risk management, to be honest with you, this is probably the most critical part of building a successful business that Cavanaugh, I agree, along with tax avoidance and tax diversification, sometimes it goes unspoken of, okay? And so what is risk management? This is where you identify and assess the risk to your business. And the risk could be things like financial uncertainty, legal liabilities, management errors, accidents, natural disasters, basically unforeseen, unanticipated threats, right? So protection is the ultimate goal. Now, when we say protection, we're thinking about you, the person. You're the visionary. You're the most valued asset to your family, your employees, and your business. I know at times it doesn't feel that way, but you are. Now, look at the second protection for your family. Now, listen, I'm a mother of 2 and I'm a newlywed. Now, for me, as I build my business, I need to have peace of mind knowing that my family is secure so that way I can concentrate on building the business. And then, of course, protection for my business, protection for your business. You work hard. You sacrifice time away from your family, your friends, from socializing in many cases. So your business deserves protection. And so to minimize the risk, you'll need things like legal documents and insurance protection. So let's dive in a little bit deeper and talk about them. All right. Here are some of the most common legal documents to consider right now if you haven't already put these things in place. Your will. What are your final wishes in the event of your death or your inability to speak for yourself? Number 2, power of attorney. Who is the agent or attorney who will have legal authority to make legal decisions about your finances, your property, your business, your medical care? And then who will be the executor over your estate? This is the named person in your will who will make sure that everything you laid out in your final wishes are carried out to a T. To a T, okay? And then listen, the next part of your risk management as you're building and working hard to grow your business is insurance. Insurance is such a critical piece of building your strategy for the future. And let's talk about what that means. You have your property and casualty insurance, right? These are things that include your home and renters insurance, your automobile insurance, your umbrella insurance, right? Which is normally purchased by people who have a lot of assets to protect against being sued. It also covers above and beyond the limits that may be exhausted in your other policies. But then you have business liability, and that covers your common risks such as customer injuries or customer property damage, right? And then you have life and health. Now, life insurance can certainly serve as a death benefit to ensure in the event of your untimely passing that your family is secure, that your desire for the ongoing operations of your business is secure. Life insurance can also be used as a living benefit that can be used to grow assets and fund your business operations, to fund any home needs that you may have, or simply be a liquid cash asset And you're going to learn more about that in just a little bit when my partner comes on up. And then, of course, healthcare insurance. In order for you to serve well in your business, you must be well medically, which includes your preventative care, taking requiring medication, right? Having catastrophic insurance at minimum, right? That offers you the limited emergency and preventative care coverages. As a small business owner with employees, you may even be eligible for certain tax advantages for offering group health and life coverage for you and your employees. So Cavanaugh can talk to you a little bit more about that too. And then, of course, disability should also be incorporated in your risk management needs. And this is what replaces your income in the event you become disabled. All right. So I hope these risk management strategies were helpful. And more importantly, I hope that it inspires you to move into action as you are building your business. Now, know that I'm willing and eager to help guide your risk management needs as well. But so much of our thoughts and decisions are in the present, right? Our hurdles, our challenges, our wins, our successes. But William White, my partner and financial advisor, he's going to come on up and share strategies to take care of your future wins, your future successes, right? Your 20, 30, 40-year-old self. And so, William, take the mic, take it away.
That mic is hot. Woof. That mic is hot. Let it cool down. Let me. Ronnie, awesome job. Awesome job. Great talking to us about laying that foundation, you know, the risk management, the things that sometimes we don't think about because as entrepreneurs, we're running. And so it's beautiful to be on a call to where all of us share a common ground, a common space, understanding that we were bold to say no to the 9 to 5. We're going to be risky risk takers, to say that we have something to give to the community. We have something to give to society, and we want to bet on ourselves. So again, kudos to everyone who's on this call and who has taken that step to say, you know what, I can do it. So I'm grateful to be here. So again, my name is William White. I am what's called a registered fiduciary financial advisor. And so what we do is we do everything from insurance to financial services, financial planning, to asset management, and also wealth management. Okay, so very excited to share just a couple of things to wet your whistle in regards to entrepreneurship driven type strategies to be able to understand how this could be attainable. Okay, so the first thing that I want to talk about, and it's the biggest thing, okay, live in percentages. A lot of times what we try to do is we try to have a fixed number as to what we're doing. Well, I can think back whenever I started my practice that certain numbers that I'm doing now that I need to do, I wasn't able to do. Why? Because I wasn't making the profit at that time. But as things grew, as I got better, my percentages stayed the same, but the dollar amount is what went ahead. Okay, so it's very important that you look at all of your expenses, okay, in order to break certain things down. All right, so what we're going to be doing is I'm going to be talking about just a couple line items, and there could be some line items that I might miss, but that's okay. But I want to give you an example as to how percentages could actually help better tone the way that you address certain things in your portfolio and in your budget sheet. So the first thing is household expenses. That everybody can't avoid that. Okay, next thing is your protection, just like Ronnie talked about, making sure that that floor is there. Okay, then we have retirement. All right, whenever I want to either have my business acquired or I want to say, hey, this is now an asset generating entity that is going to bring money to me on a monthly basis, whichever that may be, we need to make sure that we are sanctioning that properly. Okay, reinvestment. I don't know any business owner that says, you know what, I'm just going to run and I'm not going to put anything back in the business. That is important. Marketing. Okay. No one knows what you do unless you tell them. That is the basis of it. And so it has to be within your plan. And last but not least, miscellaneous. Everybody has a different business. Okay. So some things you might have to buy, goods and materials, or you have to buy inventory. Some you have is purely service driven. Okay, so there's not a lot of overhead. But at any rate, there's going to be some flex that you're going to have in order to either reinvest or take that miscellaneous and put it more into the reinvestment of your business. But it's going to be flexible. Okay, so here's an example of what something like that would look like. Okay, 40% and 10%, that 50%, so 40% household expenses, and then insurance protection. Those are typically going to be fixed. I know I have to have business liability. I know I have to have my life insurance. I know I have to have these certain things right now. So that's fixed. My household expenses ain't going nowhere. I got to have a roof over my head. I have a car. I got to be able to have those expenses. But then I'm going to have retirement, 10%. Okay, that's minimum. Because whenever you're at the beginning stages of your business, the focus is investing into your business. And that's why the reinvestment is 20%. We want to be able to make sure that those revenues are staying high because we're going to be doing things such as marketing, inventory, being able to position ourselves in a better light, okay, for our business to be able to be more profitable. And then next we have marketing 10%, miscellaneous 10%. These are adjustable, okay? So the 50% that's fixed is going to be your household expenses and then the protection for your insurance. Everything else is going to be flexible. So now let's talk about the tale of 2 months. Let's say 1 month, hey, I'm making 10 grand. 10 grand is good. My household expenses and my insurance for everything, okay, my personal, my business, all of that is $1,000. Excuse me. And we have 4 grand that's fixed, okay? So I'm going to do 4 grand there. I'm going to do 1,000. So that 5,000 is already taken care of. So I'm doing 1,000 for retirement. I'm doing 2,000 for reinvestment into the business. Again, that can be flexible. Marketing 1,000, miscellaneous 1,000. Okay. But let's say next month it wasn't as good. We made about 7 grand. Okay. So now we can talk about the 2 things that are ultimately fixed. Well, we can have a flexible plan for retirement. Okay, which allows us to be able to put possibly less into it for that month, going back to the reinvestment, and then the marketing in order for us to get going again to get back to that profit space. We then go back to the 1,000, okay, making sure that that's something. And again, all of that can be adjusted, okay? So you have your fixed and your flex. Those are 2 things that are going to be essential within your money planning, okay? Let's keep going. Retirement plan. Don't they look good, man? They're in the middle of the ocean. Don't that, man? That's tasty right now. Man, anyway, let's keep going. Let's keep going. So what is the most important factor in your retirement? I'm going to go ahead and just tell you. It's what Mr. Cavanaugh deals with. It's going to be your taxes, okay? Because here's the thing. Let's talk about tax rates historically. From 1933, and taxation started back in 1924, but 1933 is what we're diagramming, okay? So now, can you believe that back in 1948, the highest tax bracket was 91%, okay? That's unreal. So if you, back then, if you made 200,000, your tax liability was 91%, okay? Unreal. But now, tax liability in 1988 was only 28% under the Carter administration. You had 2 tax brackets that year, okay? So how do I govern myself when it comes time for me to play the tax game or play the retirement game, all right? Because here, look at this. Not too long ago, we're talking maybe 40 years ago, we had, I don't know how many tax brackets that you could have been in. The highest one, if you were at 215, you were paying 70%, okay? But now in 2020, in order to even hit the highest tax bracket at 37%, you got to make 622,000. I pray everybody on this call does that, okay? But we have a less percentage now. So how should we be diversifying our retirement efforts for our business and just for general practice, okay? So what I have is a diagram. So I go around the country and I do seminars and I do this exact diagram, okay? So I'm sitting up because I'm excited because this is what I love to do, all right? Here we go. Government currently right now says if you're 59 and a half, okay, once you get there, if you have a bucket, 59 and a half, they're going to give you 3 different tax benefits, okay? Cavanaugh, make sure I'm on point, all right? The first one's going to be what's called a tax deduction. The second one is the tax deferral. And finally, the third one is going to be tax-free, okay? So what I'm going to do is I'm going to explain each one individually, and then I'm going to show you the different type of buckets that allow you to be able to take advantage one way or the other, all right? So let's go. Number 1, tax deduction. Let's say, for instance, you make 60 grand in a year. Okay. Currently, right now, the marginal federal tax bracket, of course, we were in the state of Texas, so that's great. We don't have state tax, but federal, it's going to be 22%. Now, we get that. We need good police. We need fire. We need roads. We need a military. Okay, we need all of that. All right, so we understand taxation. However, the government says, they say, if you take 6,000 of that, okay, and put it into a tax deducted plan, they are in the current year going to only tax you at 22%. On the remaining 54,000, okay? So that is what we call the number one benefit, which is a tax deduction. It means zero taxation and deposit. Whenever I put the money inside of the bucket, it is no taxes. There's no taxes in the current year that you would pay on that sum of money, okay? That's number one. Number two, tax deferral literally means to defer, which means that while this money is growing, it can be 6,000, 6 million, 6 billion, 6 trillion, whatever it is. As long as it's in the bucket, it grows tax deferred, and there is no taxation that you will pay while it's growing in the bucket. Third, it's going to be tax free. Okay. So tax free says whenever I pull the money out of the bucket, I have then no taxes that I pay at 59.5. And as long as the account has been over 5 years, I'm going to get to that. Okay. So there's absolutely nothing that's going to give you 1, 2, and 3. You're not going to get the deduction, let it grow and then pull it out. No, the government going to get their money one way or the other. So the most efficient way that you can do this is by doing the 1 and 2, and then doing the 2 and 3. The 1 and 2 is a pre-tax plan. For instance, I put the money in the bucket, no tax. I let it grow, no tax. However, at 59.5, when I want to pull that money out, I then have to pay the taxes. I don't get the 3. All right. So that is known as like a 401k, SEP IRA, simple IRA, 403b, 457, traditional IRA. That's what that is. Okay. Then next is the 2 or 3. It says that I'm going to pay taxes on all the money that I put together. Okay. But then when I pull it out, hey, Mr. Government, I paid you up front. You don't get that now. All right. So that's known as an after-tax plan. Now, it's kind of odd, but there's only a few of these. Okay. And I'm going to tell you why here shortly. But the most common is going to be a Roth IRA. All right. Now, here's why it's important. If we have 90 grand that we need, okay, inflation is cost of goods has gone up. Now we need more money for retirement. This is what happens without tax diversification with most people. Okay. 90 grand, they put it in all qualified funds. It's 100% taxable. Remember, you don't get the number 3 whenever you pull the money out. The most important time on money is whenever you have to use it. Okay. So marginally, you're in a 90% tax bracket. 90 grand is taxed at 24% marginal. So which means that without deductions or anything like that, and why is my cursor doing that? There we go. We have a $21,600 tax bill, which means that we get to take home $68,400. Okay. Now let's show you how we make that better. With tax diversification, okay, what happens is we're going to take that same 90 grand that we need, but we're going to split it up into 2 different strategies. We're going to still get some deductions because we need tax relief while we're working, okay? But then we're going to use the other side to be able to accumulate dollars that we pay taxes now, okay? So now what happens is this, 45,000 is still taxed at 22. We drop the tax bracket, but then guess what? We don't pay anything whenever it comes time for us to retire on this amount of money. So now with that 22, just round numbers, we got 9,900 that we have to pay in tax versus 0 on this side, which means we get to take home. We have 90,000 that we have to take, but now we get to take home more, which is going to be an 11,700 difference. Okay. So it's very important that in your planning of what you're doing, that taxes are addressed because it's the most important thing that we have to look at. Okay. So this is our contact information. I want to make sure that everybody has all of our stuff. I'm going to turn it back over to Cavanaugh. Cavanaugh, again, thank you so much for having us. If we have any questions, we're definitely going to be staying here in order to answer those questions. So Cavanaugh, I'll give it back to you.
All right. Thank you, Mr. White. I appreciate it. And wow, like I said, I was over here doing my own little notes, and just to be in complete transparency, we talked about what we're going to talk about today, but what we talked generally and how it was going to flow. But if you really, everybody who has RSVP will receive this replay, because I know it can be a lot of information. But if you really think about it, it was in line, just like Ronnie said, when we passed it, it was the exact same thing, presented in different formats with different areas of expertise. Like I said, I'm looking at when the money is coming in and out your business. And then Mr. White broke down the different methods that we have that we use. Like I gave the example of cash rich and cash poor, then and also reference like profit first. And then he was talking about living within percentages. But once you dive into that book and you dive into that material, that's what they're talking about. You were living in percentages, and when you have a lump sum, you create that excess. When you don't have that lump sum, you have to make some hard decisions, which we're used to. That's not something new to us, you know. So, but the thing is about having the plan and being able to keep more for yourself and for your money and for your family. You know, I know we've all heard the stats about how quickly money leaves our communities of color, right? And one of the main reasons that money leaves our community is because we're not saving it. We're not keeping it for ourselves. So if we're keeping it for ourselves, then what does that mean? Not only are we building assets, we're recycling money within it, and we're capturing it when we have it forever. And then just what I talked about at the beginning of the presentation, we are put to situations personally because we don't have the information. The people who came before us didn't have the information, and now we're inheriting not only our miseducation, but we're inheriting that of those who came before us. What is not it's not anybody's fault. But now with this access to information, professionals like myself, Mr. White, Mrs. Talley, there's no excuses. We can all get it done. And even myself, I'm always leaning on others who have other areas of expertise. And so if there are absolutely any questions, to be honest, it's very rarely that you're gonna get all three of us in one spot at one time, right? So I do recommend that either you put it in the chat and we can address it now, because even if you have a question, please don't be shy, because somebody else might have that question, and each one teach one, right? So this is very much an economic endeavor, an economic initiative, but this is also a social thing. This is for our personal families, and we can't really increase generational wealth if we're not taking care of the wealth for this current generation, which is a very, very important thing. All right. So again, I want to thank Mr. White. I want to thank you, Ms. Talley, not only for just showing up today, but for everything that you've done in your own personal careers, and to be able to gain this knowledge, and to be able to help us, help me, all of that good stuff, right? So it means the world. And we just love saving people money, you know, either saving money that's rightfully due to you, or making sure that you're not putting out extra than you don't need. So if you need to get a better understanding of the ins and outs and the finances of your business, whether that be regular bookkeeping, tax preparation, please contact us directly. And if you got the link, you have our contact information. Um, and at the same time, if you need any of these products, you're ready to start your retirement journey, or you've already started and you want to improve it and take it to the next level, I'll also recommend that you speak to these wonderful people. I use them for my personal life. And we even had some clients that we referred them to, other clients that we referred them to, and we helped talking through to really move forward and improve our well-being. So I want to thank you all. Okay, I see a question in the chat that says, what are your recommendations for someone who is already retired? Um, either one of you want to kind of dive into that?
Yeah, I can definitely dive into that. Great question. So retired already means that we have a cash flow. It's excuse me, that's already coming in, but we've started a practice, or we started a business, correct? Am I saying that right? I think so.
And feel free, you can take yourself off of mute. Yeah, there you go.
Am I saying that right?
Yes, starting a business.
Very good, very good. Well, congrats to you on that. That's awesome. So here's what I tell clients who have already retired, meaning that you already have cash flow to take care of their stuff. The biggest thing that you can do is beef up your risk management. And here's what I mean by that. If I already have cash flow that's coming in, I'm going to build an asset. If I have an asset, regardless of whether it's a franchise, a business, a practice, whatever it is, I have to I don't need the home life. I'm not dependent on that cash flow from the profits of the business to take care of my home life because it's already taken care of. So if I am designing or I'm spending my time making sure that I'm growing something, the most important thing that you can do is to protect it. Protect it from multiple facets. Make sure that the liability is on point. Whatever assets you're going to grow, have a purpose as to what you're growing it for. And then from there, see if you want to, do multiples, like if you want to do multiple businesses, making sure you're organizing your cash flow. And again, because you're pretty much living in pure profit, this is not something that you need to do. And then also solve the problem of our community. Make sure that your legacy planning is on point. Making sure that you have the proper estate plan, meaning that whatever you're getting ready to leave, make sure that that is secure. Make sure that your life insurance is on point. But those are some of the different things that I tell clients who are already retired that they just got money, right? They're just because they're profiting on their business, they're working on their business. Well, from that, the key thing is to protect your business, but then also think about how to sanction those dollars to do some real good. Okay. Hopefully that answered that question.
Yes, thank you.
Great. All right. Is there any other questions we have for anybody from anyone that we can help tackle for you today while we're here? Anything? Okay. I'm about to start turning. Y'all didn't know I did auctions a little while ago. I was about to like going once. No, I'm just playing. I ain't do no auctions. But yeah, that's what we're here for, is to give out good information. Let's see, we got another one. What recommendations do you have for life insurance for older adults?
That is a really good question. And I'll give you an example. And my mom, she doesn't mind me sharing this story. All right. But my mom worked all of her life, all of my life, and sometimes 2 jobs. And now she's in retirement age. She's right there at 65, 66. And mom did not have any life insurance outside of work. But what happens when you leave work?
Hey,
The insurance is cut.
yes.
And so in mommy's case, we had to figure out a way to get her as much life insurance as we could within her budget. So I would say now is the best time to start. Of course, the younger you are, the less expensive life insurance is, but the fact still remains, we all need it. Otherwise, it becomes a burden to our family and to our friends. And if you are a partner in a business, guess what happens? Your death becomes now a burden to the partner that you went into business with. So I would say definitely speak to a financial services representative. You can certainly reach out to me. We can run some numbers, see what makes sense for your household, for your family, and get a plan in place. Okay, and there's several different strategies, regardless of your age. There's a plan that can work for you. Great question, though. I hope that answered that. Did that answer?
It does. I just hope there's a plan that doesn't cost half of my income.
Right? Yeah, no, I can understand that concern. That's a valid concern. Hey, let me give you my number. Let's just get together and work through what makes sense. Okay, it's 770-685-5532. And I'll also put it in the chat for you guys. Okay.
Great, great.
Could you repeat it one more time?
Absolutely. 770-685-5532.
Great, great.
Thank you.
Thank you for those questions, and thank you for that information, Ronnie. Um, yeah, it is a life-changing thing, and to be completely honest, and one of the things, even myself, I know that, and I've experienced it. We don't know the time nor the hour, right? And I've experienced the transition of my own mother, and in complete honesty, if my mother was not prepared, I would be out of there. I don't know what I would do. She had her life insurance in order. She had her burial policy in order, and also had a retirement account set aside that where she sadly, didn't really reach retirement age. In that case, it becomes an asset for myself and my younger brother, to where we'll be able to take care of a couple of things, to where, to kind of, and it took care of all of her proceedings, if you will. We didn't have to pass a plate. We took care of our mother, and we did it well. We did it quickly, and we continue to, and still continue to honor her to this day. But it's a very real thing that we don't talk about enough. And then even as a business owner, there are other things that you can look at too, in regards to having key man insurance, right? To where not only is your family taken care of, but also the asset that you've created is also taken care of. And then that's what we talk about, generational wealth, because a lot of the times, not only things come up short, or become up, or no longer in existence in these communities, or in our communities, because of a lack of resources. And their resources can be cash in the bank, or the resources can just simply be knowledge. And it's a very real thing that can make a very, very big difference in the lives of those closest to us. So thank you for that. And it's just that time. And especially if we have the ability to create these vehicles, and still, like Mr. White was talking about, and you can tax now or tax never, you know and have a choice. A lot of times we don't have that choice, and we don't realize the power in it. And yeah, so thank you. We all have a choice here. We have a choice to learn more about our businesses. We have a choice to be able to be prepared for ourselves, and being able to be prepared for ourselves and our family. It helps to make the world a better place. A lot of issues that you can ever can conceive of, it exists because somebody had a problem, more than likely economic, within their personal household. And believe it or not, that is the root of a lot of issues. And because somebody is just trying to eat, somebody's trying to provide for their loved ones. So again, thank you all for that. I tried to end with a joke, but I ain't got no joke for that. You know what I mean? But so thank you for your time. Thank you for your expertise, Mr. White, Mrs. Tally. Um, and we'll be. I'm ready.
I do have a joke for you. Okay, you ready?
Okay, I'm ready.
If you have two vegetarians who have a disagreement, they're arguing, would you still call it beef?
Would you still call it beef? Nah, it's swept up under the rug.
Okay,
That's the
that's
best I
cute.
got. So what is it not beef? What is it called, Randy? That's it.
You can call it beet. They got beet.
Okay. No beef, they got beat. That's what's up. Somebody got beat within that disagreement. Already. So thank you for that, Ronnie. So we can leave with smiles on our faces. But then again, like I said, we're here for you. Everybody who's registered, even if the people who register who are not present today, will receive a copy of this presentation. And please reach out. We look forward to hearing from you. We look forward to hearing the stories about how this type of information can affect and improve the quality of life of your families and your business. So thank you, thank you, thank you. You all have a good day. Talk to y'all soon. All right.
Thank you, sir.
Peace.
Thank you.
Thank you.